So if I receive 20 lakh rupees at the time of retirement, then with that 20 lakh rupees, I can lead my rest of life. In a year, at least you are supposed to contribute 500 rupees or the maximum amount of 70,000 rupees in that particular year under Provident, that is under Public Provident Fund scheme. You are supposed to take 3 items or 3 components. Those components are basic salary, DA, commission. Hello everyone, I am Arun Kumar, lecturer in Department of Commerce and Management, Vidhyaashram First Grade College, the Temple of Excellence, Mysuru. Dear students, welcome to this new session, session 2 on unit number 3, that is income from salary. So which is there for 5th sem BCom students who are studying under University of Mysuru. So dear students, in the last class we discussed about what is the meaning of salary and what are the components in salary, and that is the elements of salary, and also we discussed about what is allowances, what is perquisites, and what is partly taxable allowances and partly exempted allowances, and what are the fully taxable allowances and what are the fully exempted allowances, and also about the perquisites. About these many concepts we discussed in the previous session. So in this session, dear students, we are going to discuss about the concept called Provident Fund. So what is this Provident Fund? You might all be knowing that what is Provident Fund. So if your parents are working in any organization, that is in a private organization or in a government organization, they might have told you or they might have discussed with you that the salary, the Provident Fund is deducted from my salary. In very short, Provident Fund is called PF. Okay, so they might have told you about this PF. So in my salary they are deducting PF and all of that. So what is this PF or what is this Provident Fund? So in general, Provident Fund, it is a fund or it's a separate account which is created by the employer for the future benefit of the employee after the retirement life. Okay, it is a separate account created by the employer for the future benefit of the employee after the retirement. So that is called Provident Fund. So if it comes to the income tax, what is Provident Fund? So it is a fund maintained for the future benefit. Yes, as I said, Provident Fund is a fund which is maintained for the future benefit. So you are young, like you are 30 years old and you join for a job and you're working now. So you are young, you can earn and you can lead the life. Once you retire from your life at the age of 60 or 65, at that age you will not be having much energy to earn money, right? Or to go and work in a company. So you will not be able to go and work and you will not be able to earn money. So to facilitate you or to make you benefit with some monetary benefit, the employer is going to create this Provident Fund account for you, that is for employee. So the both employer and employee contributing sum of money for future benefit of the employees. Yes, here for Provident Fund account, both the employer and the employee both are contributes towards that account for the future benefit of the employee. So now I am working. Okay, now I am working as an employee with an employer. So me as well as my employer, both of us contributing to a PF account, that is to a Provident Fund account. Once I leave my job, okay, or once I retired from my job, I'm going to get that amount in lump sum. For example, a 10 lakh rupees or 20 lakh rupees like that. So if I receive 20 lakh rupees at the time of retirement, then with that 20 lakh rupees, I can lead my rest of life. Okay, can't lead the luxurious life, at least for my, the bread and butter I can maintain, no, without going for a job or without begging with anyone, right? So for that future benefit, the employer is going to create a account for employee, and both the employer as well as employee, both the parties will be contributing to this PF account for the future benefit of the employee. Worker must contribute a specific portion of his salary and an equal sum will be contributed by the employer. Yes, as an employee, I am supposed to contribute a specific percentage of my salary towards this PF account. So what is this specific percentage? The specific percentage is 12% of your salary. How much? 12% of my salary. So I'm supposed to contribute minimum 12% of my salary towards the provident fund account. And even the employer is also going to contribute 12% or the specific rate of salary to my PF account, that is for provident fund account. The employer deducting some amount from the employee's salary and credited to his fund at a certain rate of salary for the future benefit. Yes, so here the employer will be deducting some part of salary and he will be crediting that amount, the deducted amount towards the PF account for the benefit of the employee. Next, the employer also makes his own contribution to this fund. Yes, the employer is also going to make the contribution for this provident fund account. So I hope all of you understood. Provident fund is nothing but it is an account created by the employer for the future benefit of the employee. And here both the employer as well as the employee both are going to contribute towards that particular provident fund account where it's going to benefit the employee in future. That means the employee is going to get some lump sum amount when he leaves the job or when he retires from the job. That is called provident fund. Moving further, in provident fund we have different types. Okay, for different employees we have different types of provident funds. So which are those different types of provident funds we have? So mainly we have 4 types. That is, the first one is statutory provident fund, next recognized provident fund, unrecognized provident fund, and public provident fund. So mainly we have 4 types of provident funds. Those are statutory provident fund, recognized provident fund, unrecognized provident fund, and public provident fund. So these are all the 4 different types of provident funds what we have. So let us discuss one by one. So the first one is statutory provident fund. So what is statutory provident fund? It's very simple. This provident fund scheme is mainly intended for government departments, educational institutions, and university employees. So under statutory provident fund, overall can open the account. Overall can open the provident fund account under statutory provident fund. So the government employees, the people who are working in government sector, those employees can open their provident fund accounts under the statutory provident fund the scheme, or the people who are working under education institutions, or the people who are working in universities. These people can open the account under the statutory provident fund scheme. So this scheme is mainly for the government employees and for the people who are working in educational institutions and who are working in universities. Next one is recognized provident fund. Recognized provident fund. So now what is this recognized provident fund? It is a fund to which Provident Fund Act 1952 applies under these schemes. So for this recognized provident fund, the Provident Fund Act 1952 will be applied. This provident fund can be opted voluntarily. Yes, anyone can go and opt for the RPF. Any employee can go and opt for the RPF, that is the recognized provident fund. Anyone can go and opt it for voluntarily for this RPF. Any organizations which exceeds the number of employees more than 20 persons, such organization can opt for recognized provident fund. Yes, if any organization, if any business entity, those entities have more than 20 employees, okay, the business entities who have more than 20 employees, they can go and opt for recognized provident fund scheme for their employees, where the employer and the employee will be contributing towards the provident fund account for the employee's future benefit. The scheme is to be approved by the Commissioner of Income Tax. Yes, once if employer wants to give this facility, the provident fund facility to the employees, then is supposed to take the approval of the Commissioner of Income Tax. Okay, once if he wants to, or once he decide to give the benefit of provident fund scheme to the employees, then is supposed to take the approval of the Commissioner of Income Tax. Then only he can proceed with opening the provident fund account to his employees. It can also avail the tax benefits. Yes, if you open the RPF account, that is recognized provident fund account, some relaxation will be given under tax. While you are paying the tax to the government, you can opt for tax deduction under RPF scheme. So this is about recognized provident fund. Next thing is unrecognized provident fund. So under unrecognized provident fund, it is that provident fund which is neither statutory nor recognized. Yes, here it is not a statutory or it is not a organized provident fund. Okay, it is not a statutory provident fund or a recognized provident fund. So the provident funds which are not called statutory or recognized provident fund, those funds are called unrecognized provident funds. Any institutions or organizations can maintain this fund. Yes, if they are not open their provident fund account under statutory provident fund scheme or under recognized provident fund scheme, then they can open their PF accounts under unrecognized provident fund scheme, and anyone can maintain this provident fund scheme. The last one is public provident fund. So what is this public provident fund? So public provident fund will be called as PPF. PPF. So PPF was started from 1/7/1968, that is from 1st July 1968. Every individual, including a salaried employee, can subscribe. Yes, here this particular provident fund, that is public provident fund, only says that anyone can open the provident fund account under PPF scheme, that is public provident account scheme. Even though you are working as an employee but you don't have PF account, you can open your PF account under public provident fund scheme. Okay, so here anyone can go and open their PPF account, that is public provident fund account, and even a salaried person can also open the public provident fund account scheme if he is not into the PF facility. Next, if public provident fund scheme is activated under the Provident Fund Act 1968. Yes, this provident fund, that is public provident fund, goes as per the rules and regulations of the Provident Fund Act 1968, and self-employed persons can contribute to the public provident fund scheme. Yes, if any person is self-employed, if he is doing his own business and all, then he can also go and opt for public provident fund scheme. In this provident fund scheme, the minimum contribution is rupees 500. Yes, in this provident fund scheme, the minimum contribution is how much? 500 rupees. So every month you are supposed to contribute at least an amount of 500 rupees, or per annum or for per month, and maximum of 70,000. That means in a year at least you are supposed to contribute 500 rupees or the maximum amount of 70,000 rupees in that particular year under provident, that is under public provident fund scheme. And employee will get 8% interest per annum on contribution. Yes, based upon the rate fixed by the government, maybe 8% or 7.5 or 8.5%. The government is going to decide what percent of interest is supposed to be given to the provident fund account holders. So based on the rate percentage given, so as of now they're giving 8%. So employee will get 8% interest on their investment. So whatever the amount they contributed to the PF account, whatever the amount will be there at the end of the year in that particular account, so on that amount they'll be getting 8%, that is an average 8% of interest. The maximum period is 15 years. This can be also extended. Yes, the maximum, the duration is 15 years. So up to 15 years you can contribute towards your public provident fund scheme, and after that you are supposed to withdraw the amount from your accounts. If you still want to continue, you can continue with some rules and regulations or with some conditions. So this is about public provident fund. So mainly we have 4 types of provident fund, that is statutory provident fund, recognized provident fund, unrecognized provident fund, and the last thing is public provident fund. I hope all of you understood the different types of provident funds what we have under the provident fund scheme in India. Next thing is computation of HRA. So yes, before getting to solving the problems under income from salary, we are supposed to know about few adjustments what we have under this particular income, that is income from salary. So the main adjustment what you will get under this particular chapter or under this particular income is HRA, that is house rent allowances. So while you are solving the problem, they might give you the problems or they might give you the adjustments with respect to this HRA, that is house rent allowances. So to compute HRA, that is house rent allowances, you are supposed to make 3 columns. Okay, you are supposed to make 3 columns, that is particulars, amount, amount. So you are going to make particulars, amount, amount, 3 columns. In particulars column, first you are supposed to write HRA received. HRA received you will write, and you'll write the amount in the outer column. Okay, HRA received, you'll write the amount in outer column, and less least amount, less least amount. So we are going to write 3 points. In that 3 points, whichever is the least amount you'll get, you are supposed to less that amount from the outer column amounts. So in least amounts, the first point is again HRA received. HRA received. So whatever you are going to write here in the outer column, the same amount you will be taking here. And next point, 40% or 50% of salary. I will tell you what is salary. So you are supposed to take 40% or 50% of salary. And the next thing is rent paid minus 10% of salary. Okay, minus 10% of salary. So what you will do, you will take the least amount in these 3 and you will take it to the outer column and you deduct it from the first amount, then you will get the balance. This balance is called taxable HRA. The balance is called taxable HRA. Okay, this is the format how we are supposed to compute the taxable HRA, that is taxable house rent allowances under income from salary. So we are supposed to make 3 columns. First you are going to write HRA received, that will be given in the problem itself. You are going to write this HRA received and you will take it to the outer column, and less least amount in these 3. Again you write the same point whatever you written in the first point. HRA received, inner column amount, 40 or 50% of salary. I'll explain you what is salary. And rent paid minus 10% of salary. Rent paid will also be given in the problem itself, and you will be deducting the 10% of salary from rent paid. This is the format. Now we will be having a question that what is this salary? 40% or 50% or 10% of salary. So here to know the salary, salary means basic salary, DA and commission. Basic salary, DA and commission. These 3 components are called salary for computation of HRA. And that too, DA should be part of retirement benefit. DA should be part of retirement benefit. And commission should be on sales. The commission should be on sales. So while you are computing salary, to compute 40% or 50% or 10% of salary, you are supposed to take 3 items or 3 components. Those components are basic salary, DA, commission. And the DA should be a part of retirement benefit and commission should be on sales. Then only you're going to take this all 3 and you're going to total these 3. Okay, you'll get some total. Let us say you got 10,000 rupees. On this 10,000, you're going to do 40%, 50% or 10%. So what is this 40 or 50? Whether to take 40% or 50% based on the city the employee is working. If employee is working in a metro city, then you are supposed to take 50% of this value. Okay, 50% of salary. If he is working in non-metro cities, then you will take 40%. Okay, if he is working in metro city, you will take 50%. If he is working in non-metro city, you will be taking 40% of salary. Next, rent paid will be given in the problem itself, minus 10% of salary. Again, on this 10,000, you will take 10%. So this is one adjustment with respect to computation of HRA under income from salary. So next adjustment is computation of value of rent-free accommodation. So the first one is you are living in a rented house and your employer is giving you some rent. That is, the HRA, what we call, that is house rent allowances. Sometimes the employer have the quarters and given you free of cost. At that time, how to compute the cost of that building, whichever you got for free? That is called computation of value of rent-free accommodation. For that, we have a format where you will be writing two columns. One is particular, another one is amount. Particular and amount. So in particulars column, 7.5% or 10% or 15% of salary. Okay, 7.5%, 10% or 15% of salary. You will take the amount here. And if furniture value is given, add 10% of furniture, 10% of furniture value. Okay, furniture value. You will take the amount and you will total this. And from this total, you deduct less rent paid. If any rent is paid by the employee, less rent paid, you will deduct it. You will get the balance. This balance is called value of rent-free accommodation. That is, in short, we call it as RFA, value of rent-free accommodation. So here it's very simple, 7.5, 10 or 15% of salary. Again here, what is salary? Again here, salary means basic salary, DA, commission, bonus, DA, commission, bonus, and all taxable allowances. All taxable allowances. So salary means all basic salary, DA, commission, bonus, and all taxable allowances. The total of all these three components is called salary. So on that amount, you are supposed to compute 7.5, 10 or 15% of salary. Okay. So when to compute 7.5, when to compute 10% or when to compute 15%? See, if the employee is working in a city where the population is less than 10 lakh, if the population is less than 10 lakh, then you will be computing 7.5% of salary. Okay, you will be computing 7.5% of salary. Next, if the employee is working in a city where the population is between 10 lakh to 25, where the population is between 10 lakh to 25 lakh, then you will be taking 10% of salary. If the population is more than 25 lakhs, okay, if the employee is working in a place where the population is more than 25 lakhs, then you will be taking 15% of salary. Again, what is salary? Basic, DA, commission, bonus, and all taxable allowances. You will total this, you will get the total. On this total, you will take 7.5, 10 or 15% based on the city where he is working and based on the population in that particular city. For that amount, you will be adding 10% of furniture value. You will be giving, like, for example, you will give furniture value as 1 lakh. Okay, what you will do on this, you will do 10%. How much you will get? You get 10,000. Simple. You add that amount with this and less rent paid by the employee. Whatever the rent paid by the employee, if it is given, deduct it, you will get the balance. That balance is called taxable rent-free accommodation. So these two are the very important and major adjustments what you will get in your particular concept, that is income from salary. So with this, I'm going to wind up this session. I'll come up with few more new topics. Until then, thank you all. Have a nice day. Namaste.